All right. Good morning. Good morning. Good morning. Let's get started here. Make sure we get to recording here in the room. Good morning, everybody. Happy Tuesday. Hope you guys are doing well. I'm going to go ahead and, even though we have the future screen, I'm going to move the future screen over to the monitor. So don't worry. If I could get a mic check, make sure we're good to go here. That would be nice. All right, Jersey. Good morning, man. Good morning, Melissa. Good morning, Tony. Good morning, Mignon. Very, very nice to see everybody this morning with the market down. If you know anything about Trendy, you know that I love a good clearance sell, and I'm probably one of the most relaxed people you'll ever meet when the market's going down. Whether I'm net long or not, I've been in this position many, many times, and just like a good lifeguard, right? We knew that the water conditions were not the greatest coming up here, and at any time they could have pulled the rug. I want to go over this with you. We had to find a couple demand zones to the downside. The ES futures broke down through one of those, and then the Nasdaq is sitting here in the demand zone that we gave you yesterday. Now, what's important is for everybody to just kind of take a moment of silence and think about how beautiful these charts were yesterday. I can't make this stuff up. I mean, literally, we came right up into the zone yesterday. It was a perfect sell off. And if we zoom in here, you'll see that we had trendy turn signals to the downside. This also gave you kind of like that extra comfort. Hey, this might be a great place to short. And if you did so, guess what? Things really worked out for you. Over here on the NASDAQ, same thing. Again, these were not put here this morning. These are levels that were hit to the tick, and then we got the trendy turn signals. And this is what we love to see. Now, are signals, signals, are they always like perfect? No, right? They're not perfect, but man, these trendy turn signals, I mean, we came up with these, we studied these for almost a year, and I came out with them. And I have to say, at the levels, they just mean so much to me, and it's really cool to see. So, why am I talking about the trendy turn signals? Because we're down here by a green zone, right? The green zone is an idea place where we should see buyers start to step in, especially where we have divergence. Now, why is this important to you? If you're not a futures trader, why is this important to you? Because this is really a snapshot of the market, if you will. And I understand there's the Dow Jones and there's the RTY and all this jazz, but all of them are basically synergistically working together. All right. So I expect the market to be down. I mean, it's not rocket science. So when we come down into these zones, what I'm looking for, you see these little yellow, not red or not green. The yellow signals are what I want to be looking for in the green zone. What if we don't get the yellow signals? Then we stay patient, all right? So trying to buy a dip, sometimes the dip keeps dipping, right? And we want to make sure that we get something in here to kind of give us some kind of idea that price will continue, or sorry, could continue, or we might be seeing buyers come in. All right. And that's the key part of this opening, right? Is that a lot of traders don't see that. Like I might post something out on social media and say, hey, we're looking for buyers here, but we don't necessarily just go in unless you want to be aggressive. If you're an aggressive trader, you just take the trade in here, you know what your risk is, you do a bracket order and you take the trade. Now, what if we start to see signals come in? Today is very, very important for you to understand. And Melissa, if you wouldn't mind grabbing the video on how to approach a down market, could you get that out of the education um, channel real quick and just send that out in main chat for all of our new traders that might have never seen that? That would be nice for them to maybe take a few minutes this morning and watch that, or at some point. I probably should have sent that out this morning. Okay. And then it's in the education tab. And then here, um, a relief bounce. I want to talk about a relief bounce. This is something that a lot of people may say like a relief bounce, but they may not have any sort of process behind it. Hey, Aspen. Hey, baby. My dog's waking up. So my dog, it's funny. I have two Bernese Mountain Dogs, and they come they come around me and hang out with me just for a few minutes, right? Because they love their mom, but they come and hang out by my desk. because I'm like a messy eater sometimes and I'll drop things on the floor. So she has like this morning routine where she'll walk in here and kind of snoop around, if you will, and look for some crumbs. So, anyways, so let's talk about the relief balance. We're going to go to a whiteboard really quick. This is really important. So, when the market pulls back, we're always looking over to the left for demand zones. All right. And that's where I get that green zone, if you will. Well, if we get into that green zone and things start to work, okay, so we're kind of right here right now. We come in there, we want to see those yellow signals pop up. This is for a conservative approach, by the way, waiting for signals. Aggressive, you just take the trade. Um, if we get this conservative approach and we start to see this, relief bounces, what we do is all of a sudden you'll start to see some buyers come in. It might take a while because people are scared and then it starts to pick up and go. I want you to make sure that you're going to anchor your Fibonacci's from that pivot high to the pivot low where we start to bounce. Find your 23.6 and your 38.2 on your Fibonacci's. So 23.6 and 38.2. The first targets, if anything, would be 23.6 and 38.2. This is what I call a relief bounce. Now, a lot of traders, they go for the red or the 50, right? You'll hear a lot of people say revert back to the median of the levels, okay? And this is very true. The 50 can be a very powerful spot to short off of, but in a bad downtrend, you'll find that the 23.6, they can't even get over the 23.6. All right. So it's a great target. So in downtrends doesn't mean that we can't go long. It doesn't mean that we can't make money. Just understand that your profits, okay? You got to have a good risk to reward if you're going to take a trade like this, okay? So that's the first thing. The second thing you'll notice on my charts is the EMA cloud. And the EMA cloud has become really popular for a long time now. I think a lot of people have them. Ours are built a little bit differently as they have sell and buy signals in them. Now, again, disclaimer, I'm not telling you to sell and or buy. What these signals are doing are they are identifying, okay? They're identifying structure that I teach you. And it's pretty complex. Like the structure that I teach you is inside and up, inside and down. Okay. Now, these are measured in a lot of different types of math, if you will, but also structure. So things have to be at a certain degree of percentage before they signal off and so forth. And that's what you're seeing here when it comes down into the red and the green arrows. So the red arrows right now are saying, hey, this was a sell, right? Your trendy turn signals were saying, hey, this is a sell up here on the 10 minute. All right. And same thing here on the 10-minute, it was a sell. The cloud is so important. All right. So back to the whiteboard, please. This cloud is red right now. All right. And this is kind of what you'll see in this video that we just sent out is that the cloud is resistance until proven otherwise. It's really that straightforward. Every time price comes to your cloud, whether you're on a 5-minute, 10-minute, 20-minute, 30-minute, I don't care. When you're underneath it, it is resistance until proven otherwise. That means in that relief bounce, I would be really paying attention to the cloud. If price gets here, guess what? It's a good place to look for the next short or the reload of the short. Now, please understand that the cloud can be kind of wide. What I always tell people on this cloud, I want you to draw a line on your charts and from the entry and the proximal and the distal, if you will, on these lines. And this would be a zone. Okay. So it'd be a zone. And when price comes up to this zone, I want you to think, hey, this is a good place to short. Now, if we short at the first line, then obviously your risk is really wide if you're trying to put a stop on the backside of the cloud. Okay. So, what I prefer is that when price moves back up into the cloud, I prefer it to dig in a little bit deeper. And as it gets close to the backside of the cloud, this is where I want to take my short. I'm not looking for anything special. I'm just thinking in my head, well, my risk here, let's just say, is 10 points, but my risk here is only 3 points. So again, the deeper we get in the cloud, I like the risk to reward. But just know in a very serious downtrend, or should I say a serious sell off, you will find that they won't even push it inside the cloud that often. They'll hit that little cloud or get very close to it and smack it, and right back down it goes. Okay. So very, very important for you to understand these key things, I think, in a downtrend for today. And guess what, folks? You don't need a whole lot on your chart to understand this. One, I show you the structure, I teach you the structure, how to find it. All right. Please understand that not all structure will hold. At some point in our career for this year in 2024, you will see demand zones broken, you will see supply zones broken. The best we can do is understand the strategy, how we approach it, and then you can look at it from a conservative or an aggressive approach. The next thing that I want to show you that's very important for today is the fact that, and here, let me go ahead and move this chart, this futures chart back up as for our members here. So I'm going to take this and move it over to our screen so you guys can see that. All right. Now, the most important thing, the next important thing is the ES futures. And these are all the charts, guys. And if you watch me on YouTube and you're not a member or you are a member, it doesn't matter. You have these charts before the week even starts. And this is where it gets really important as well. What are we doing on the day? So a lot of times when people are trying to catch a bounce, they don't take into consideration what day are we in the cycle. And what do I always say? I say, anywhere from 1 to 3 days. Okay. So in this case, we are coming down into the zone here. All right. And this was your blueprint for today. So we had a resistance level. And by the way, this resistance level was your short trigger from last week. And then I just raised that short trigger. This is your buy trigger or zone in here where I'd expect buyers to step in. And again, important to understand, where are we in the cycle? This is day one, it's inside. This is day two, this is down. This is what we call an inside and down formation. Okay. Inside and down formations create supply and then they lead to inside and up formations. Pretty neat, right? Well, if you look very closely on this chart, you can see that this is an inside and up formation. So basically, the news catalyst, whatever it may be, CPI, Jerome, earnings, it doesn't matter. Pushes price down into demand. And typically, what happens is your retail traders, that's you and I, guys, is we get scared, we get taken out of our positions, and then the bigger money will typically load up while you're selling. So they're basically liquidating you, if you will. Now, you'll notice that I have these little yellow edges on here. So, what I would be looking for somewhere in this box is for some little arrows to pop up, maybe on the smaller time frames. But what I would like to see is that either we start to bid here on the open, or I think max pain today is going to be this yellow line and or this buy trigger. And these levels at the moment are around 49 and a half or 49.28. Okay. Now again, that doesn't trump the smaller signals that may give us a yellow signal to go long. Okay. All right, so that's what we got on the ES futures. Let's go over here to the NASDAQ, and then I want to look at a couple other things. So currently we're in QQ puts that are really deep in the money now. And then we have SPY puts that are really deep in the money. So what do you want to do with those when you open? Do you want to immediately take them off? I'll show you here in a minute what I'm thinking, okay? This is an inside and down formation as well on the NASDAQ. We pushed into resistance. We started to pull back here, okay? And now look where we are. This is exactly what we trained for. And I know that sounds funny, but really, we are professional athletes, right? When it comes to trading. So we have to be ready for this stuff. And sometimes we're totally exhausted. Things are hard. And some people may choose to sit and wait for 1,000 things to show up. I'm just looking for my trendy edges. So notice that price has moved down into the trendy edges right here on the NASDAQ. Okay. Again, this is where I'd expect a relief bounce. If I'm wrong, then you start to look down to the left. Okay. One thing that you can do if you have a special level that's on your chart, whether it's my levels or somebody else's, maybe you're using volume profile and you're looking at a volume wedge, it doesn't matter. One thing that you could do if you're not aggressive, Typically I am, and I'll just buy at the levels. All right. But if it breaks, look for the reclaim. I love a trade off the reclaim. So let everybody get flushed, right? So the aggressive traders get flushed. They're like, I can't do this. And then all of a sudden, buyers do step in right after they get stopped out. And then you get what's called a reclaim of the level. Boom, entry goes in, stops go where you're comfortable, and then you take the trade to the upside. But how far do you take it? You take it to the relief bounce, measure your stuff, look for the 23 and 38, and that's where you look to pill out on the downside or to the upside on a relief bounce. Okay. Now, the next thing is what if you want to stay in the short? Well, you do the same thing that I just taught you. Let's go ahead and put some Fibonacci's on here. If you want to stay short, you need to understand where you would also want to be long and or trim out. So if I were long and I think that the most we could get is around 23.6, then guess what? This is about where I look to say, hey, if I'm short right now, I don't necessarily want to get out unless we start to bid and create a base above 17,737. Or you can pick the 38.2 up here at 17,811. Okay, so hopefully that really helps you guys out on a morning like this. Once again, just like the ES futures, we are inside and down, and we have moved down into the trendy edges, and we are finding a bounce here. The trendy edges, remember, folks, these trendy edges, they are zones, and a lot of people forget about that. All you have to do is click on them, come in here, turn on your cloud, and you will see once we do this, you have yourself a zone. Remember, trendy edges are a playing field of supply and demand. Notice we have our zones, okay? So it's not just a line, if you will. It is a zone. I prefer just the line because I understand how to trade it. But for our new traders, you can always turn that on, maybe to give you a little bit more perspective of how wide that zone is. Okay. So that's the ES and the NASDAQ. Now let's go ahead and pull up our active all products trader. So this is my SPY position. And as you can see, I mean, this thing looks like it's been buried 6 feet under, man, right? Like this is like, holy cow, we're way down here. And I understand that these were expensive, but I wanted to be in this position going into today. Why? Because guess what? I have long positions on. I'm sure not everyone's perfect. So if I have long positions on, I kind of want to protect myself, but also it was a great opportunity to go short. So what do we want to do here? Well, when the market opens up, I want to show you the technique we use with the SPY or the PMZ, the pre-market zone, which is our it is definitely our most popular indicator. A matter of fact, Melissa is doing, okay, she's doing a challenge right now with the PMZ, which is really, really cool. She's showing you exactly how she is identifying her trades and how she wants to take them, and she's very methodical. Okay. So when the market opens and we have the PMZ, which is right here, okay, you have two choices here. You could say to yourself, well, if the SPY can't create a base above the PMZ, then I stay in my short. Okay. Remember, how do we trade the PMZ? If it goes long, if we break above the PMZ, we go long. If we break below it, we go short. So why would you want to get out of your trade if we're staying below the PMZ? Just think about it like you're resetting to get into this trade. Okay. Totally up to you. Now you might just open up and go, "Holy shit, I'm up a lot and I just want to be out." Now, what about the QQQ? Okay, so we'll come over here and take a look at that as well. So if we come to QQQ, this is a option that I put on quite some time ago, and then we added yesterday, and these are up about 100 and something percent before the close. And you can see here as well, sorry, we are also in the money. Okay, so these will be up quite a bit. We closed at 435 yesterday, and it's at 427. All right, so you can do the math. You can add on to this, and these should be up nicely when we open up this morning. Okay, now what do you do about trades that you decide to take home? Anyone that asks me questions where I've already put the answers in your notes means that you're not going over to the notes section in the morning. Please go to the notes section and read my notes. I have management notes and I have things that I'm looking at. So please go there, okay? That's going to save me time in the morning so I don't have to repeat myself over and over, okay? But on trades that we open up in the morning, if we take a trade, okay, and I always say this, if we are intraday trading, it's a lot easier to manage your trade, isn't it? I think it is. But when it's time to go home at night, you decide to sleep with that trade. You got to wake up next to it. Do you want to wake up next to it? Sometimes it's not what you thought it was, right? So, Google is a great example. This thing was absolutely beautiful, I thought, yesterday on the 4 hour. I'll go back and take a look at it and show you. Okay. And I'll show you exactly what I was thinking here. And this is the beautiful thing about trading. And the big part why I like teaching about it is because for some reason, a lot of traders think you're only going to win when you take a trade. So there is this reality that you must lose sometimes. Okay. So, what do you do when you fall into a situation like this? One, this thing was looking great. It went from red, it came into the trendy edge, it started to move up. My shares were looking awesome. It went to white, and then the momentum went green, and then it blasted off, and then we are hanging out up here. And this was an ACDC. ACDC equals ME. I was looking for 151, and I'm still looking for 151. All right. However, all right, this thing decided to pull back. Why did it pull back? Because the market's pulling back. All right. Market's pulling back. All of a sudden it doesn't look good. So to finish my story, when you decide to take a stock home, okay, at night, you got to wake up next to it. And when you decide to take anything home at night, you have to realize that you can't put a stop on options when you go to sleep. Does everybody understand that? I hope everybody understands that in the room. There's no such thing as a stop on options when you decide to take it home overnight. That's the danger of swing trading. But I want you to look at the beauty of it. All right. So, for example, I'll show you over here when we're looking at Google. I knew that I put a $600 position in it, and I know that I can lose $600. Now, let me show you the exact opposite of that. So, on my Tesla trade, I'm down $1,352 this morning. Okay. So, what is the difference between Tesla and Google? Tesla, for example, in this particular trade, okay, I don't know what I'm going to wake up to. I could wake up and it'd be down $50 today, and it could really put me in a bad mood, or we could be up 50 and I'm in a really good mood. The difference is that options, guys, even when you take a loss, at least follow your plan. And if you follow your plan and you understand your losses, it's really easy to digest. It really, really is. It is a beautiful thing that we can trade leverage and know exactly how much we'll lose if it doesn't work out. There's nothing great about, like, if you're holding a big position, and big is perspective, right? So if you come over here and look, this is about a $50,000 position. I know that I could lose $50,000 if Tesla went to zero. And if anybody didn't see, a lot of people are trying to blame Tesla's pullback yesterday on Elon's tweet, right? Like, he had put a tweet out there about, well, you just have to see it. Anybody see it? Anybody see that on Twitter yesterday? Anybody see the tweet that he put out? Anybody see that? Oh, anybody want to see what he put out here? So he said, it's always interesting. Let's see. I gotta show you this. Now, again, remember what I teach you. Okay. So I'm gonna pull this over real quick. This is what he tweeted. Everybody see that? Elon tweeted this. This is Disney's logo. He turned it upside down and said, D's nuts. So, I mean, what do you think's gonna happen, right? People are like, "Hey, man, you gotta grow up. He's off his rails." Whatever, whatever is going on. All right. I don't know. But do you guys recall what I tell you when we're talking about demand and supply? Okay. When we're talking about demand and supply, what have I told you over and over and over? And I promise you it will never change. When we are moving into demand zones, okay, and remember, I'm covering this every week. If you guys haven't seen it, go back and watch my videos. We could see 125, okay? Because we could see 125, I understand how much money I could be down unrealized, okay? I'm also hedged for this position as well. But what I want you to understand is bad news pushes price into demand. And a great example was when Elon threw the beanbag through the window, when Elon did whatever, when Elon went on to Rogan and smoked a joint. Like it's always something bad. Prices go down, retail gets shook, and all of a sudden people start to get their stuff back together. When I say people, the company, and all of a sudden things are working. Most retail traders love news. I don't watch news. The closest thing I guess you could say would be that I watch X and I see what happens on there. And obviously, I'm up to date with some stuff. Okay. So I just want to remind everybody bad news pushes price into bigger pockets. Good news pushes price into very nice people like you and me into a euphoric stage where we're like, well, I think NVIDIA could keep going. I think SMCI hasn't moved enough this year, right? And then we start to think, well, maybe I'll buy the $1,000 calls for this week, right? Pure on FOMO. Okay. So just think about those things. But at some point, what goes up must come down. The question is, how long? Timing is the variable. For anybody who is very anxious to buy the dips, I want you to think today, no matter what you do, is this a relief bounce? Please, for the love of me, just buy. If you're going to go long, just apply the strategy that I just showed you. It doesn't matter what you're trading today. If it's down, and you decide to take a long, I want you to identify the 23 and the 38.2% and just at least have them on your chart. If you have the cloud, use your cloud the way that it's meant to be used. Okay. Also, if you're in a long-term position and you don't want to be scared by, what's going on, I highly encourage you to stay away from the high time frames, guys. For example, let's say you're in Nvidia and you got in at 690, and you're like, damn it, this thing was at 750 yesterday and now I'm at 690. Use your clouds. The clouds have proven over time, over time, over time, especially if you come over here to the quarterly, that the cloud works really well as a buying opportunity. Okay, so higher time frames, I'd say concentrate on your weekly, your monthly, and your quarterlies far as trend is concerned. These small pullbacks are really important. I think they should be there. It's healthy for the market. It is not healthy, some of these moves that we've seen lately. And unfortunately, you might have bought something that hasn't been that great. And as soon as it starts to look great, the market pulls back and now all of a sudden your little stock that started to look great now looks like crap. It's just part of the market. And as I told my good friend yesterday, it's only February, folks. I don't personally think the market's been easy to trade unless you just happen to be in Nvidia or SMCI or any of that. Okay. Anyways, we're going to get started here on the open. I'm going to manage some of my trades. All right. And see what happens when we open up here. And QQQ, I will probably, let's see here, we're at 441%. Let's do a trailing stop on this. I'm gonna do a trailing stop of like, and of course these guys are messing with the prices. All right, and the Tesla call that I sold. All right, so it sounds like we just got out of QQQ for 417%, and those were good for $8, $8.23. And I'll try to, the SPY is up 53%, but remember, this is a very high delta with a lot of time left, so 15 marches. So I'm going to try to hold on to this guy. And give me 1 second here. Let's go ahead and on Tesla, I'm going to close the covered calls. And I might sell some more calls if we get a bounce here. Come on. All right, so we'll sell those for 47%. I'm going to keep the SPY put for now. Then I'm going to get over here to all right, good. There's NVIDIA coming into about that 700 level. You know, in all reality, guys, when you come in here and you take a look at NVIDIA, they do have earnings. So sorry about that, Control Z. This is where I believe they could pull back into earnings. And this is where I believe that they could go. So we're really equilibrium here. And this is a really healthy pullback. If you're interested in taking NVIDIA into earnings, this is where I'd be aiming for a call debit, and this is where I'd be aiming for a put debit. Okay, so basically 650 by 625, and you know, I don't know, that 800 round number definitely looks doable, but after such a big move, it makes you wonder if they can actually, you know, pick up and go again. So, and we'll go ahead. Actually, this is what I'm going to do. I'm going to close out the spies for $1,400. So those are about $1,500 a contract. And then right when we come up to the PMZ, what we can do is look to buy puts on the intraday. But, you know, we'll see. And then I want to come down my watch list here. Oil's looking decent. Um, Apple, guys, you hit the target I gave you yesterday. Okay. Toro, your equity, your equity losses are huge. Yeah. Hey man, when you're trading equity for the long term, I guess they could be, right? What are you in? Really like in TRSP as well. You're in shop. Yeah, so I bought some shop here pre-market. I only bought 10 shares and then I have a few more because I, you know, obviously I don't want to go crazy here. Um, let's see, Melissa, what are you guys talking about? The Orlando? I don't know what you guys are talking about. He's one. He wants a video when I was in Orlando. Is that what he's saying? Video from. Uh, uh-huh. I got you. I got you. All right. Let's get some. So again, shop. I'm gonna buy some more. I only bought 10 shares, guys. So you know, call me big. We're up $2.50. So you know, I don't mess around, baby. I'm not trying to put 50 grand into shop, sorry. So we'll just buy some 10 more here. And then I have another 10 um, down at the bottom if the market sells off. All right, so we're coming up very closely to, and again, guys, a trade is a trade, and this is where I differentiate, I think, from a lot of traders. Is I watch a lot of traders put on trades, man, and it's like a freaking science project. I got a process, it hits a level, I take a trade. Like I'm not trying to think about too much. The only important thing to me, how much money can you lose, John? That's right. So, am I going to be gut checked? Am I going to be able to walk to the computer in the morning? Am I going to be able to talk to my wife? Like all these things, seriously, and I'm not like being funny. Like you can take a bad loss, and I swear it feels like you're dead inside. All right. So I know what that feels like. I've been there, done that. So I'm not trying to put myself in that position ever again. And so I want to just be mindful, of my body and how I feel. And I just don't want to overthink stuff, man. It either works or it doesn't, right? So if you're perseverating on losses, then, that means to me you came into a career field where you actually think you're only ever going to win. So, all right. So on this put side, we're just going to do like a couple lottos here. I'm going to do the 493 once we get up to um, right in this, and I hope we rip. I really do because I noticed my PL has gone up a lot more since we started selling our puts and stuff. But right in here, I'm gonna get started. So we'll buy a couple here. And for anybody that's watching on YouTube, um, so I have API alerts, so I don't need to type stuff, which is super cool. It just doesn't get enough love. It's like we don't cherry pick. What I trade is what my members get to see. There's no written alerts, if you will, and I don't know if that's cool to you, but nobody else is doing it, so I think it's kind of cool. I think it's kind of trendy. So, all right. So the PMZ, I'm going to bring this down one more time. So if you're buying in the green zone, by the way, guys, I think so. I've bought some futures already this morning on that pullback into these zones. And so I'm also long. Please keep that in mind. Man, let's see here. Some things just will not work, unfortunately. Yeah, let's go down here. All right, so our Shopify is working good here. And again, these are just like some day trades, make some hamburger money to show you like don't be scared to buy stuff. I sent this out to not only to you guys here in the room, but I sent it out on X. And it's really straightforward. I found two zones. Typically, I would buy put debits for this zone, so we would have made money here. But I decided I was actually going to trade it yesterday, or sorry, today, this morning, like as soon as it happened, but I got to it a little bit late. And I want to show you the power of a relief bounce. So we're going to go here. We're going to go into the, let me take this off. Damn it. I'm going to take that order off, and you're going to see we're right at the 23.6. So the way that you want to approach this type of trade is you actually want to, and I'm not going to take any of these off because it's so small, but this is where you'd be trimming. So if you followed along and it was a really big trade, you'd be trimming at 80.61 from our average price of 79.44. Now we averaged up, so our first buy was further down, but that's where that trade is coming from. Now, if we can get up to 84.81, what we could do is go ahead and put your orders in already. And you could do something like 8, 9, 10. And what is that next level? 82.93. So we want to come in right underneath there and go. So if 82.93 is a 38.2, what I want to do is just come in right underneath that. Okay. Doesn't have to be perfect. It'd be something like, Don't be a D for a T. Okay, so like 65. And then that 50 is 8481. So come up here and on this one, I don't know, go right there. All right. So again, just hamburger money, please. Again, I'm just showing you how I use my process. I'm not trying to tell you to buy or sell. Just know your risk when you take a trade. Okay. All right, guys. So the puts that we already took are already up. And it looks like these are up 46%. So go ahead and trim just to be a good steward of your money. We're going to go ahead and trim there. And that's going to give you, let's see here, that is going to give you 44% on that trim. All right, so those were the 493 puts, and then we'll just leave them here. It'd been nice. We should have trimmed if we could get 100%. That would have been nice. Now, one thing that I also have to be aware of is that I sold the 185 puts on Tesla. Okay. So, you do know if I don't do anything and I close in the money, they're going to give me another 100 shares. Now, I'm willing to take on that risk. All right. Just know that. But I'm also kind of like, do I really want to? You guys know I started with 500 shares and, it gets kind of weird, kind of scary. To me, it does. I'm not invincible. Like, I think the 500 share level was at the point where I might not wake up in the morning and be able to crawl to the screens. Like, seriously, especially if I woke up and I was like $100 down or something. So you never know, man. We're one tweet away when owning Tesla for anything weird to happen. So on this one, I'm actually going to try and sell calls again. Okay, so I'm going to sell some calls against Tesla. All right, for this week. And I'll probably jump into the same. Let's see, we got 192s. I'm going to sell the 192s here. And let's just start off right here. So again, selling the 192. If we get to 192, thank you, Jesus. Like, I want to be there, right? So that's what I try to think about. I mean, I'm using my levels, guys, but I'm also, thinking to myself, like, where is my right? We were down almost $1,600 this morning or whatever it was. But now what I'm trying to think of is like, look at my average price on Tesla. Okay. I'm going to freeze the screen. I'm trying to sell a call right around here. Right. So I went with the 192 and a half. And basically, when you sell calls against your position, guys, you got to have a big enough account, but I also want to be able to take in the premium. Okay. How's everybody doing out there? You guys all freaked out, or how you feeling? How's everybody doing in the room? Everybody okay? You guys doing okay? Good. Bueno. Buenos dias. Buenos dias. I really want to take Spanish. I took 4 years in high school, and Roberto knows I want to move to Spain. Maybe Ashley and I, just for a couple months. So I was looking at a couple Airbnbs. Anybody listen to me that live in Spain? Anybody live in Spain right now, or have a place in Spain? Because I'm really interested in going there and living for just a couple months just to fill it out. But um, yeah, I want to go to Madrid, I think, and just we live on the water here. It's very to me, Ashley. Don't you think this is kind of country living? Not like country where people are like. I feel like we're like I don't know this part of the world. We don't have skyscrapers where I live. I don't live in South Florida. Like this isn't like rooftop bars and you know good music and it's a small city. Like the highest buildings like how many stories? No, it's more than 4. The Holiday Inn might be like 9. So, Barcelona's better than Madrid? Okay. Yeah. Hey, Miss TQ Trader. So I live in Gulf Breeze, Florida. Yeah. So wait a minute. Should I tell you? Are we friends, Miss TQ Trader? Like, should I be worried? No, I'm just kidding. Who did? Beach Trader used to live in Gulf Breeze? That's awesome. Yeah. Sweet. Oh, I appreciate that. So, well, if I can help out in any way, that's awesome. So your Shopify is already up to hamburger money, guys. So I just want to, my thing is when I come in here, a lot of times I'm like, shit, John, you put 50 grand in Tesla. Why didn't you put 50 grand in shop? Stupid trader, right? But anyways, I showed you guys real quick how to make some quick money. Let's do it. Let's be a good steward of our money and do something like this. Let's just take off, right here at the high, 5, boom, market. All right. So that was $1.52 from your entry, right? Not bad. All right. And then we'll come up here, 38.2. So we're basically not being a D for a T. We're going to do another 5 right before that. And we're going to go right here. Okay. And see if we can get that. Now, a lot of times these trades are fun, right? I'm not going to lie. Like, I love being transparent because I think that trade's freaking hard. Like, I really do, guys. I think it's really hard, right, Roberto? Right? It's really, really hard. Yeah, Google, I can't do anything about Google. Read my notes in the notes, man. When I go home at night and I sleep with it, I had to wake up to something ugly. All right. And it was telling me right away, like, you shouldn't have took me home. All right. So I apologize. It's a trade that most likely is not going to work, or maybe it will. I don't know yet. Is the green zone going to work today? You know what I mean? I've seen wilder things happen in the options market. So we'll see. What I would ask from all of you guys is if you ever get in a losing trade, whether it's your own trade, whether you copied a trade, whether somebody told you to take a trade, don't perseverate on losses. Move forward and look for the next setup. I promise you, this is a job. And I think that's where people they forget investing would be like, "Hey, I'm buying Tesla, and maybe in you know, 5 years, I tell you how I'm a millionaire." Okay? Trading means when you get your ass in the chair and it's time to trade, you need to trade. That means sometimes being a good manager and being defensive, right? Taking some of those trades, right? By the way, let's see here. What was that? What was it? Did I just trim some more? Oh, yeah, I did. I trimmed. We got $2 from Shopify. Our SPY puts are at 60%. And so what I mean is when you get in the chair, all right, now what we could do here, all right, for our hamburger money, I want to show you guys this. We're gonna come in here and we're gonna do 10, okay, 10 shares. And what we're going to do is I'm put the stop like way down here, right? Do 10 shares right there. And then I'm going to right click on it. I'm going to go to cancel replace order and I'm going to do what's called a trail stop. Okay, trail stop. And notice here it says 0.10. That means it's going to follow price. Oops, I just got stopped. Never mind. I was really hoping to show you guys the right thing there. Sorry about that. I didn't realize I put it that close. Sorry, I was going to do a trail stop. Show you guys how to do that. Let's see, loaded more of my 100Y SPX IC yesterday. Load at extremes today. Got nice $1,700 a contract. Went on this pullback. NDX put yesterday at 660. Open at nice 18,720 bucks. Is that it, Jasper? But couldn't get a fill last enough until 16,000. Yeah, those fills are hard on gap downs, man. because a bid and ask is so wide. And I would imagine on your NDX, man, it's like ridiculous, right? But if you got a $16,000 trade, from that, that's absolutely sick, man. Congratulations. You all right, babe? You all right? I said, are you okay? I saw you trip over the. Ooh, yeah, Jasper, we need to see your real PL, buddy. Because you know, Jasper must be trading for like an institution, man. He got that real size, baby. Yeah. So far, I've shown you guys all I did on the SPY was come over here and I'm just gonna bring this down real quick. All I did was once price came up and smacked the PMZ in the cloud, we went short on the put side. It really is at the end of the day, it could be that easy. Sometimes it's not, right? And sometimes it'll blow through, but on a second day down, the overall sentiment for me is typically 1 to 3 days to the downside. And then once we have a really big sell off, we'll typically 1 to 2 days on the consolidation side. Sorry, digestion side, like kind of just kind of sideways action, if that makes sense. All right. Now, what if you want to add into the position? Let's say that you didn't go big enough and you're like, oh man, this trade's up 92% right now, which it is, but I only did $100 worth. Well, what do? You try to short again on the next attempt to the cloud. Now, I'm going to tell you this. I know this because I've been teaching for a long time. There are traders in here, and you know who you are. You're too scared to try this. And then let's say it comes up again and comes here, and you're like, and it comes a little bit higher. You get scared and you don't do it again. Then we make a new low, and then price will go up and finally, you try to do it and it does this. And I will always tell you, try to react. Like, stop looking for a million reasons to get into a trade. I don't care who is trading, I don't care who has a graded system. I am against the grain when it comes to that. These people that have A plus setups, it's all BS. To me, it is. Just like my setup can be BS. Does everybody understand that? It works a lot, but sometimes you're going to lose. There's nothing worse than losing to something that you deemed as a great setup, and then you lose and you're like, oh man, that like defeats you. So here's an easier way of saying things, guys. You're going to lose or you're going to win on a trade. I don't care what process you use. The only thing that matters is what is between your ears, what your allocation tolerance is, what you allocate to these trades. Can you withstand the pullback when it doesn't work for you? If you're a short trader, if market's going up, can you? Can you withstand it? Find a level of money that works for you. It's going to make trading so much funner, guys. So much more fun. Okay? I promise you. That's why I'm always in a good mood. I'm not over here trying to like rock your socks off because I took a $50,000 position. Okay? It's not attainable for a lot of people. And I don't want to gear anybody in the wrong direction. And I hope you guys understand that. Couple $100, man, is all you need to make a decent trade, right? Look at our trade from QQQ. Just a couple $100, man. You got to sell it for $400 this morning, right? 400%, sorry. Okay, everybody got that? I'm sorry if I'm like getting pumped up, but down days are my favorite because down days is where the majority of people lose their mind, they lose their money, they revenge trade, they start to do all this crazy stuff. Just listen to me. A trade is a trade. Don't be afraid. If you're on your last leg and you don't have much money left in your account, take a break. Get educated. Okay? Read. So I'm a supply and demand trader, but see this book right here? Technical Analysis for Dummies, right? That's me. I'm a dummy when it comes to trading, right? I can only get smarter. This book, there are so many good like little things in here, and it makes me understand really at the end of the day how the masses think. And that's why I do a lot of reading. I want to know what retail traders think, right? Because if there's one thing that I realize, I don't want to be like the other 90%. So how do I change things? A couple other things. If you don't know much about options, okay? If you don't know much about options, this book right here. This was one of my first books that I ever started right here. This is all about options, third edition, the easy way to get started, everything you need to know about options. Okay? Okay? Lots of good stuff. And then there's John Carter books um, that he has recommended in the past. Letting Go by David R. Hawkins. Okay. Power versus Force by David R. Hawkins. Okay. Edward Thorpe, A Man for All Markets, From Las Vegas to Wall Street. Emotional Intelligence 2.0, also one of my favorites. Okay. Awesome stuff. Absolutely awesome stuff. All right, so we're going to close out the rest of the SPY pullets right here. And then we're going to look for an opportunity to see if we can get in again. And you'll notice that the QQQ is starting to get its little signal here on the 10-minute. Okay. Now I did a 10-minute this morning because I felt like the 5-minute would be really scary and noisy. So I do this when I feel like there's noise coming in. We're actually going to go to a 15-minute now on my charts. Okay. And I'm going to bring those down because I understand people on YouTube cannot see these. All right. So we're going to go with the 15-minute, just like this. And I think that today's charts are really messy looking, and I apologize. And the reason why is because I kind of had to come in here at the last minute and create some new stuff after that big flush. But so I could take these levels off right there, do that right there. And this is the PMZ. And by the way, guys, I didn't talk enough about the PMZ. It's 12 points today. Holy shit. And the risk is 50 points. No, thank you. Use micros today, not minis. Unless you just got you're just brave like that. That's awesome. And then let's see, on this QQQ, we're going to come up here and see if we can get, I'm going to hold out before I do anything. Yeah, so the options book that I really like is give me one second here. One of my favorites is the All About Options third edition, The Easy Way to Get Started, Everything You Need to Know About Options. It's by Thomas McCafferty, Mccafferty. Okay. Now I will tell you guys, I'm self-taught in like so I went to Online Trading Academy to learn about supply and demand. That's a serious school where Sam Seiden, who basically was the founder of Supply and Demand, taught me a lot. But I'm self-taught in the fact that I deep dive into everything, and I found and created a lot of cool stuff that I realized was a lot easier for people to understand. Okay. By the way, you're hitting that upper level there on Shopify. So congratulations if you decided to follow in, whether you did shares or stock or whatever. Nice little move there. Also, Tesla moving as well, which we just absolutely love to see because I sold the puts as well on Tesla. So that's looking good. Now we're going to come over here. And this is about the time I think in the market that people start to feel like, hey, man, maybe this is buy the dip, right? Don't you feel like that? Well, I'm going to pull up my PMZ scanner. Boom. We're going to freeze it just for a second. Green means we're above the PMZ, yellow means we're in the middle, and red means we're below it. So I want to look at names right in this section. Okay. And so far, I got Apple, CRM, Win, Riot, all these names, Netflix, right? If you have a favorite name that is now on clearance, the question is, do we want to trade it today, right? Maybe you have a name that you're interested in. Okay. Any of these look special? Let's go to, oops, let's go to Win. Oh, where are you at? There you are. Yeah, I love Celsius, man. You saw it up there, right? So I'll be looking at it here in a second. That's the first one I was about to go to. I think when we could see a bounce here at 102.93, you're at the lower weekly edge. I would prefer to buy when at 100 and some change. So let's move on and go to CELH. All right, so QQQ, this is the place if you want to try a put again, this could be a place where you could try, okay? But QQQ is a little bit more dangerous. So I would say since we made nice profits in QQQ, that I would just do something like kind of silly. Um, and honestly, I'd rather see the Nasdaq push about 30 more points before I get my puts. 30 to 40 more points before I get my puts. At least try. Okay. Everybody know that. And 44 points is about what the Nasdaq needs to move in order for $1 move in the QQQ. Okay. If the Qs drop, I could see 17,553. That's another 100 points. That'd be $3 out of the money. So you'd be looking at the 126s. Sorry, not 126, 426. Sorry, 426 on the downside here. And those are going for, they're already moving fast. 73 cents. This is what I'm going to do. I'm going to do a butterfly to the downside because I don't want to spend a lot of money, man. I think I'll be wrong here. You know what I mean? I don't think I'm going to be right. So I don't want to spend a lot of money, but I want a nice return if I am right, you know? So let's do 428. I say we. I'm going to do. All right. All right. Little broken wing butterfly here. So I got 428 by 426 by 425. Okay. All right. There goes CELH, guys. So I was over here farting around looking at this damn thing. And we are right where we want to be. Hey, you're welcome, Otis. Good job. All you had to do was just apply the move, my friends. All right. So what's our risk today? 45 cents. Let's try a little bit here. Let's start with 25. I'm gonna buy at market. All right, and then your risk on this PMZ trade is a close under 57, but I went so small that my risk is actually going to be more than that. Okay, everybody understand that. So if I went full blown, hold my beer mode, then, it would be a whole different story. Then I'd have to really obey it. But what I'm noticing here, and I want to show you what I'm noticing here, is that we created this pivot and we got a trendy turn signal here. So I kind of feel like the bottom's in. Your targets to the upside here are going to be 58.50. So one thing that Melissa, I don't know if you brought this up or if you wrote it in there. You can jump on the mic if you want. Her and I talked over the weekend, and we really want to stress to you guys that I think that your daily edges and any edge that's above, we should categorize this as an optional trim, okay? Because I think we could pull a little bit more out of the market on some of these PMZ trades. So what I mean is like this would be an optional trim, right? If you're in a position where it's so big and you feel like you need a trim, then it's an optional trim, right? And for somebody that might have a small trade on, like myself, my first trim, I would much rather be up here. You see what I mean? So this would be like a optional trim. This would be a target. Totally up to you though. Doesn't matter. Any of you guys listening today coming to Vegas for the money show to see us? I've gotten a couple emails on some people who are coming, but I was just kind of curious if anybody listening is coming out there. Dave, I know Dave, you'll be there. That's awesome. It'd be really nice to see some of you guys if you want to come. I'm giving a free craps lesson if you want to hang out with me one night. I love playing craps. I would actually probably put myself in a category of professional craps trader, but it's been a long time since I played on a regular basis. But I love playing and I love teaching. You guys know that, so I love teaching. And we'll definitely find a day to to go over and gamble on the craps table. We also, I believe, we're going to have a poker tournament, like always. That will be fun. I get there on the 20th. Now, I do have a pretty busy itinerary, meaning we're also bringing our friends who we're celebrating their um, their birthday or his birthday. Neighbor, our member here, will be going. And like I said, we have a concert to go to. We're going to the Spear to an event there, and then we are going to race some Lamborghinis and Ferraris and stuff over at Exotic Racing. That should be really fun. And yeah, should be a good time. Yeah, Maiko, we're going there for not YouTube because I know YouTube's in there a lot. But what is it's like Mother Earth or something like that, some kind of exhibit thing. So, hey, baby. Huh? Yeah. Yeah. You're welcome. Hey, Parker. Hey, buddy. Come here. Mm, you're a bear, man. You're a bear. Yeah. Hi, Aspen. All right. All right. I love you too. Oh, Mike O. So you did see that. Okay, awesome. That's what we're gonna go. Really, Zach? Man, I wish you could come then, man. That'd be awesome. Dave, bringing your wife. I'm bringing my wife as well. So sorry, guys, we're not going. You know where? I'm just kidding. Settle down. Oh man. I wore a pink shirt today because Valentine Day is tomorrow, men and women. Don't forget, okay? Don't forget. Make sure you go get flowers after today's session. I don't care if you lose money or not. Don't be a loser. Go get some flowers. And if you never buy flowers, who cares? Buy them anyways. If your wife or girlfriend tells you they don't like flowers, so what? Buy them flowers anyways. They always say that, right? My wife loves flowers. Like she loves them. And me personally, I'm like, why are we buying flowers? All right, guys. So we're coming up on our optional trim target here on CELH. This would probably be almost $1. How many did we get? 25? Not quite. We're at where did we get in? 57.80. Okay. So right up towards the top would be, but I'm trying to go for the line in the sand. We'll see if we get there. Okay. All right. Let's see if we can find something else. See if I can go in something else a little bit bigger here. Microsoft, I really like, man. I'm glad we took it off yesterday. We only made $1 to the upside, but I just it just is really loving staying around the 400 level, which is really, really boring, right? Nike, nice pullback. I love Nike long term, guys. So NKE, if you look at the annual chart, the yearly, so each candle represents 1 year. I'm really digging it off of the 9 EMA cloud. So we'll give it a chance here to yeah. So right here, I'm really liking this chart. I'm thinking long term. I don't know. And today, I mean, if you're going to add in, just know that, it would be something I would add into later. When's our next earnings? That are the 200 SMA after 2 days down, 1 day down. March 21st. March 21st. So I want to at least go past that. We gonna find a little bit of love in here or what? Come on, little green boxes. What are you doing? Oh, I know what we can do while we're sitting on the mic here. Um, what, who's reporting, right? Who's reporting? Let's see. Tonight. My thoughts on Netflix. Um, are you in a trade right now? Two contracts, gotcha. To the upside. I actually like the trade up towards 600. Anybody, I mean, I just got my latest hey John, do you want to add family members or do you want to use your Netflix in other states or whatever? Add another $9. So these guys are going to, continue making money here. It's not a bad deal. But this is an inside enough formation on the yearly, and personally, I think we're headed up to 630. But I don't know what option you're in or how long you're in or anything like that. So let's see here. I actually been wanting to get in on Netflix, so I love when something pulls back, and then somebody asks about it because I rather buy on a pullback than buy when something's trying to break out. But again, the question is, are we talking when is their earnings? Another really important thing to consider here. One thing I want to look at, you could see a move further down to 546, 536. Yeah, let's look at the earnings. April 16th. Let's do April 19th. Ba, ba, bum, ba, 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 bum. Yeah, kind of like it right here, man. It's right around the 23.6. And this is where it gets fun. I'm gonna try it at the money for this week and see if it can get going here off of this little level. Let's see. And then I'm gonna sell some more Tesla calls if they allow me to. Let me see. So and we'll add some more if they bounce again. CELH is up about $1 now, guys. So that's four trades I think we've taken that are working so far. And then we got a butterfly on QQQ because we didn't expect it to work, so I didn't want to spend a lot of money on it. But we've already made money on it. Remember, one thing that I do is I use my phone to kind of bring me back to reality on my trading. I want to know you get kind of confused during the day. So I'm looking at unrealized losses and Tesla, and my day trading is actually doing really well. I've made a lot this morning on this, but what I want to look at is like QQQ. Like, have I made money for the year? And I have. And I encourage everybody to do that. So on QQQ, I come over and I think about, okay, am I making money on the year? I am. Okay. And I put on a butterfly and I understand it can rip from here. And, I only spent X amount. Actually, I spent, barely 5% of what I made this year on a butterfly. And it's like, it's okay if it doesn't work, you know? So just something to think about. We are starting to get a buy signal on the NASDAQ sorry, not the buy signal, turn. We have two consecutive turns now from the green zone. So we're starting to work a little bit here. Okay. Starting to work a little bit here. Let's go. On basis, I think you asked that before. So just to be very clear, man, we got to be careful, right? So we're not financial advisors. As Melissa would tell you, it's all about your risk, man. So like Google, I like for me, $600 compared to, how much money I have to trade with is really small, right? And so like if I want to add into these 150s at 27 cents, it sounds like a damn lotto. But if I would have added in on the dip, man, and bought like 10 of these, I'd already make my money back. Like it's really not that big of a trade. So this is the part that is, again, everybody's different. I like scaling in. Always said that. So yeah, yeah. Yeah, I have an appointment today at 12, guys, that I have to head to. I won't be gone that long, but just letting everybody know. Let me see here. I have to ask, let's see. I don't know if is there a chat on this restream thing? All right, and let's go to IWM. I want to see what those options are trading for. I still don't have a good deal on them, I don't feel like, but shit, man. I'm adding. I'm so small in the position that I'm going to add on my long terms, guys. So these are leaps. I'm not. All right, so it looks like, these things aren't losing a lot of value. Like IWM's down $7. Yes, I'm going to add, you know, 218 by 238. I'm buying out of the monies and I'm gonna buy because I've been wanting to put like at least a 5% position in here. So I'm just gonna keep adding when I get the opportunity. It's so frustrating because they're like, it's a nice pullback, so they're trying to, um, I don't know, just trying to get you to bite. So I'll add some more there. All right, so I added into my leaps. Yesterday we were up 50%. Today we're up 3%. I can't, the timing is the variable. I think it's so funny. Like simpler, send out an email about um, my leaps that are 50%, and then it's the day before they turn into 5%. Timing is the variable in life, isn't it, my friends? I had programmed to go long on the MNQs, and for some reason my program didn't work. Um, unless we didn't did we get a 1 minute signal on the NQs? Maybe not. I don't know. All right, CELH almost at $2 now. I mean, anybody take CELH or shop with me this morning? Where are you guys at? Huh? Anybody? Restream. Where is my chat on here? Sorry, guys. I'm trying to captions, QR codes, music. Ah, there we go. What's up, guys? I didn't realize I I had a chat here. Let's go. Nice move. Look how easy I showed you how to make hamburger money this morning. Look at the PMZ trade off the CELH, man. Oh, we hit our first target. I didn't even realize. Let's be good stewards. I know it's only 25 shares, whatever. All right. What is 25? Let's do 13. I'm going to sell at market. All right. That's going to give us how many dollars did we make on that trade? $1.58. Don't knock it till you try it, baby. PMZ to the rescue. Melissa, did you have any trades to set up? AMD trim. It looks like she was in. Boom, boom. Was that today, my friend, or was that yesterday? See, once again, I don't even know that you took a trade. I didn't hear anything come through. That's so weird. But that's only because I'm talking so much. That's all. Yeah, it's weird. So, well, I might be able to ask I might be able to ask a question here really quick, guys. So, how do I why? Why? Yeah. What the Who did that? Who did that? Jeez, someone's in here messing with our stuff. Man, that's crazy. Anybody else had that on every morning? That okay, that makes a big deal. That's crazy. Yeah, that's crazy. I've never even I didn't even know what that meant. That's crazy. Oh well. Now I know. We are good to go. We are good to go. That's exactly why I ignore you guys because I have no idea you're even saying anything to me. That's why I always say, sorry, I didn't read the chat. Um, you know, is because I feel like I'm having to catch up and read things. I can't read all this stuff, you know? So I'm sorry, guys. Now we know, though. I'm glad I just asked that. Shit. What'd you ask me, Chad? You know what it is? Somebody set me up. Someone came in here and clicked it for me. Mhm. I'll remember now. I mean, because it is kind of like right in your face. So, oh, okay. So why would I do that, Alaskan Chad? So instead of going long, that's a great question. So let's come over here. So the reason why I went short was based off of, if you guys remember, I had somebody in the room say, "Hey, John, what's special about your spy put?" You guys remember that? I'm trying to remember who asked it, but I can't. Somebody asked, "Hey, what's so special about it?" The reason why I went short, guys, is because of the targets that I gave you. So these are the same targets that I gave you yesterday on the upside. Okay. So if we come over here and look, the reason why I went short is a couple reasons why, Chad. And I think what you said was a great question, man. Because it can be confusing if you're just looking at a neutral strategy. Like, why would I short here and here? The reason why I did the SPY and the QQQ shorts is because these charts showed me that we were hitting my targets. Okay. The second thing was I'm kind of exposed a lot to the upside, right? I'm not really looking to add on per se more and more long positions. So I had Google long, I have a ton of long positions, right? So I'm thinking more in terms of one, we hit our targets. Two, we had the trendy turn signals. And three, I'm just overly exposed, man. You know what I mean? For and then wait a minute. The next thing here is obviously the fact that we've been going up for 14 weeks, man. You see what I'm saying? So there has to be that's a little bit of just gut feeling inside me that I'm like, okay, this doesn't make sense. By the way, guys, we're up $100 on the Netflix contracts. If you guys want to take a quick winner, you're welcome. Totally up to you. It's a quick trade. It's an intraday trade because I bought the weeklies. Okay, so we can do. Let's see if we can peel out a. There we go. So we close that $6 for 20%. Okay, that was just an intraday trade. And again, we're not out of the woods here, man. See, this is where everybody forgets. What are we supposed to remember right now? Can somebody tell me? What are we supposed to remember right now? Once you start feeling like you're like, oh man, we took 4 or 5 trades and they all worked. What are you supposed to be remembering right now? Relief bounce. Thank you. So it doesn't mean that I want you to be scared. What it means is that just be a good steward of your money, man. If you're making some money, take some profits off. Like, try not to step your bounds here. So, where we at on? Yeah. Okay. Relief bounce. If we just come up here to this sell off candle this morning, where you at? Oh, things are slowing down. If we just go to this sell off, you could use those levels. You can use the overall level, come all the way up here to here. And for me, I mean, if you take this range up here and all the way down to here, you're gonna see this PMZ is basically right where you want to be looking at shorting, or sorry, taking profits off of your trades. Okay, so it's like perfect, perfect. This is where it gets boring. Either we have a fun day and things go crazy, right? And then we're back at all-time highs, or we just sit here and chop for the rest of the day, and then you find yourself taking trades that you should have just like stayed patient on, you know. So all right, so we close Netflix for easy 20%. We have, okay, we could do this on CELH now, guys. So we're going to come over here, and I showed you how to make some good money really quickly on just a few shares. So for my small account traders, I mean, this is perfect, man. Come down here. Let's just put a stop all the way down here so I don't get stopped out this time. We're going to put a stop. We're going to right click. Why does it say two? Okay. What in the hell? Come back down. Okay. Why does it keep saying 2? Oh, because I have 12. See? You gotta pay attention, man. 12. Alright, so we're gonna put this here, and we do it far enough away that we can't get stopped out while I'm trying to do this, okay? So we are going to right-click on it, go to Cancel Replace Order, and then right here where it says Stop, we are going to hit Trail Stop, just like that. Okay. And let's just follow this. We're going to follow it with about, I don't know, let's do 30 cents. Okay. Matter of fact, I can come up here and kind of measure some shit. 26. Actually, let's do it with 50.50. Just like that. Confirm and send. Boom, send it. And now I have a trail stop in for 50 cents. Okay. Now, if you wanted to take this off right now, you can see that we got in at 57.84 and we're up $2, man. Not a bad trade at all, guys. Okay. So again, congratulations. That was a PMZ trade, by the way. And to be fair, 50 cents is kind of like a big trail stop, but I was trying to line it up with some fibs. We'll see if it works. Cool. Let's see. Now, remember, I sent out an NVIDIA game plan for this week for Simpler on Sunday, Monday. Should have been sent to your email, I think. Um, yeah. Well, uh, so that's what you're saying. So when I do those videos, it's only for the central room? Huh. It's weird. Okay. Mm, gotcha. Hmm. Interesting. Oh, I want to show you guys something really, really quick. You guys ready for this? This is very important. I'm going to show you how I manage butterflies and debit spreads. Super important. Okay. Are you guys ready? So important. I feel like I got to do this every couple days so you guys don't like forget. All right. So we're going to come over here and let's go to, let's see. Okay, cool. So I just found out that we're trying to request that my simpler central videos are coming over to our members as well. So just so you know. And Mimi, I don't know if you can hear me, but is it okay if I stay on YouTube and just kind of stream while we're trading? Okay, cool. Yeah, because we trade for a while here. So what I want to show you guys is on the QQQ butterfly. We did today. So we made nice profits, and this is just like a very small fraction of that. So this is how I trade when it doesn't work on a spread. The idea is that you have a very small risk. Okay, let's say that this was 60 and it was going to pay me 180. Okay, if I'm right. If it goes wrong, which not a big deal, what I'm paying attention to is right here. These things are only 33 cents. I'm going to right click on this and I'm going to buy back this. Okay. All right. So it just bought back and then it's sent to the room so you guys can see it. And now I need to let you know QQQ. And this is why I don't type shit because I type so freaking slow. You should appreciate the API alerts. QQQ, bought back, body of butterfly. Okay. This exposes me long the, what strike is that? The wings. Okay. And then I'm going to take a picture of this and send that to you guys. And you know that, but I'm just trying to talk you through it so that you understand what I'm doing. Now, the reason why I do this is because one, the position is cheap. All right. At the end of the day, if the whole thing is a bust, I lose $100. Okay. So I'm going to put this on here, send this out to you guys. You're going to get that alert. Okay. Now, this is the part that I'm talking about. We had a question, Miss TQ Trader, if you're in here. If once I sell this, I no longer have a percentage on my trade. What I do know is how much I paid for the trade when I first put it on. Okay. So I understand, like, if I kept a journal and I wrote down everything, okay, if I wrote down everything, the biggest thing that I'm looking for here, okay, is what did I pay for this trade when I put it on? So I'm going to go up here and try to find it. Give me 1 second. And let's just remember that I think that was at 36.37 cents. Okay. Okay. So I paid 55 cents. I'm going to freeze this. And Miss TQ Trader and anybody that is, and seriously, I know you guys have a lot of experience in this, and you may have something that can help me here. Okay. So I'm thinking I paid 55 cents for QQQ butterfly. But see, what happened is I exposed myself more. I know that I can only lose 55 cents, but now I can lose also this and this. Okay. What I'm looking for that you guys can't see, as soon as I take this trade, I look immediately at the bid and ask. Let's say that in this case, the bid and ask on this wing right here, right when I bought back was 25. Okay. What I want to see is this thing go up to 75 cents, a dollar, something like that. So I want to buy back, right? Or I want to close this position once the cues start to drop and if they drop. I don't know if it's going to work or not. I'm hoping it does, but if it doesn't, I'm okay. But the reason why I did it right here, guys, is because now we're moving into or around the liquidity chop and towards the top of that cloud. Does everybody understand? So the way that I'm looking at it is now, okay, it's cheap. I could buy back the body. I'm only in a 30 cents option. But if I'm right and we reject here and then prices come all the way back down to here, I am most likely going to make my money back from the entire trade. Does that make sense, guys? So what I'll do is I'm going to give you a hypothetical. If this goes to, let's say, 75 to 80 cents, I'm going to close this and then I'm still going to have a lotto for the day. And if for some crazy reason we go to 425, I'll be selling this one as well. Okay, that's what I'm trying to do every single time that I buy back the bodies or the short side of debit spreads. Okay. All right, where you at? What did you take, Melissa? If you don't mind getting on the mic, and I have no idea what you did. I'm so sorry, but now I can hear everything. All right, so let me get there because I'm not sure people can hear you on YouTube. So I want to go over AMD trade. So she took a AMD trade based on the 5 minute. And did you use the PMZ? Okay, and she's doing the PMZ challenge, like I said this morning. And so she took a trade, and once it loads here, let's talk about it. All right, so what did you take? Okay, yeah, it's right. Yeah, it's just bouncing around. All right, so you took a 175 call. Okay, so she took it on the first close above the PMZ. Yep, which is right here, just like that. Eh, right here. Oh, up here. Okay, gotcha. Gotcha. So you trimmed at around this area right here, and then she just used what's on her chart. So then she used the line in the sand, which is part of the indicators. And then she trimmed at her next target, which is already on your charts. So this is what we like to talk about, guys, is that everything that's on our charts is already a trade plan. Once you learn what you're doing here, so the PMZ, right? Remember, you have two different ways to take this trade. The first way is conservative versus aggressive. She took the conservative approach. Okay. So once it closes, she took the trade and then she stayed in this trade as long as it's closing above the PMZ and not below. She probably had a stop that she gave the room. What was your stop, Mel, on this? Hmm. So right here. Yep. So she had a stop about right here at 165.50. Okay. So she has a 2 hour inside and up formation over here to the left that maybe you guys can't see. So that's going to be her support. Then she trims over here because of, I mean, this is obvious. You have a huge sell off here. So she's being careful, making sure that she trims. Then she trims at the line in the sand and then trims at the trendy edge. And then do you still have more on or no? Okay. Okay. Yep. Okay. And so she's trimmed her last, or not her last, she still has some left. She had 99%. So this is actually perfect. This is like one of those that could be intraday until proven otherwise, or she gets stopped out. So she has her stops based in on her Fibonacci's. And this is just something that we back tested for a long time. and she's trying to stay in the trade as long as prices are closing above the 23.6% of the move, which is really smart to do. So she's conserving what she's made so far, right? She's being a good steward of her money. She's trimming along the way, and she's being very methodical. All right, perfect. I love that. And what she just said is that she chose the 23.6 because of the structure here. Not only is the structure evident there, but you also have a green signal kind of letting you know, identifying that we have the right structure here. Okay. So in her mind, and I understand how she's thinking because we both trade exactly the same charts, is that if price were to pull back here, we have Fibonacci that we already know is called the bull channel, but we also have a little small pivot slash demand zone there, right? So the idea is that price can come in here, but we should find buyers in this area to pick up. And the possible next targets would be these orange levels that are already on your chart, which is really, really nice. Yeah, and so very important is the candle close, not a touch of a level. That's what also differentiates how we trade here compared to most traders is we respect the time frame that we're using. So if you're using a 5 minute, which we do on the PMZ at this moment, it would be like, hey, and I don't know, Mel, you'd have to tell me are you using a 5 or a 30, but she's using a 5. So the 5 minute, it doesn't matter if the 5 comes down and smacks this. What matters is when the 5 minute closes, does it close above the level? And if it does, she'll stay in the trade. If it doesn't, she'll close out. So that's pretty cool. Thanks for explaining that. And then hopefully I explained that well over here, so you guys could hear about it as well. Oh, Microsoft? Did it rocket out of the PMZ? Oh wow. Yeah. Nice one. Nice one. Yeah. Let's see. And then if we come over to, yeah, and you guys can see these are now 40 cents, right? So again, I would like to sell this if we can, get to 80, 75, 80, somewhere in there. So I'll just kind of put it in here. If it doesn't work, it's okay. But we are starting to reject a little bit there. And let's come back over here and take a look at, Jesus, man. FTX never had a chance, did it? It's down to $8 today, Mel. It finally started to look decent yesterday and then boop. But check out NVIDIA all the way back up. This was what I was trying to talk about a little bit earlier was the NVIDIA charts that I put out and video I sent out to the members here. I just want to see what we did so far. And so far, it's keeping the 4 hour trend, and that's kind of been the story of all of these high flyers, man. If the 4 hour cloud is there and you want to take a shot at it, that's the best place to take a shot, like on these little pullbacks, because what they've been doing is just pulling it back right into it and then shooting it right back up to the highs. Now, if this takes out the high again, our target for this week was 799 to 863. Well, this is more like a earnings target. Sorry, and but who knows? With this name, we could see it. We could see 799 this week if it wanted to. So, not trying to FOMO anyone. Just Those are targets that I came up with. So, all right. And I sold some more calls on Tesla, which are obviously, as Tesla's going down, we're making money because we sold those. Okay. Now I want to watch the QQQs with you. Okay. So right here we have, now we have, if we were to sell this position right now, it'd be 50 bucks and then you would get your 12 here, right? So that is 62 bucks. Okay. $62 that you could collect in this trade, but we're trying to get more. So be a little bit greedy and hold this. And CELH, our trail stop is still in. Netflix, we had a perfect 20% on that. And then, oh, I totally forgot that I have futures on. I guess I could have trimmed up there towards the PMZ. Didn't do that. We'll hold it for right now. Oh, and what throws, Miss TQ Trader, what throws off the PL during the day, are you still in here? I want to show you this really quick. So you can see what I'm talking about. This is the part that's frustrating for me, but I think it's too complex for a thinker swim to. And so Rock's Tube, I'm gonna look here in a few minutes. Give me some names, like who's reporting tonight that you'd be interested in, and I'll take a look at it. Okay. And I am trying to figure out mention. Okay, so what I want to show you is what it looks like on my PL today, right? So give me one second here. Where's my damn room? That is not it. There we are. Okay. So this is what, now that I bought back the body, right? And this is not accurate. Okay. This is the problem. If you think about it from my bot perspective, I am not down. So look at this position right here. Okay. So I just posted that in there. And what I was showing her and everybody is that, like, on my PL, okay, it's once I break the body of the butterfly, this negative 62% is taking into account how much the options were when they were bought. And if you remember, on a spread or a butterfly, this could have been $1.50. And then let's say this is 80 and this is 60, right? That's a butterfly. What happens is, when I get out of this percentage is coming from, like, as if I were to have bought this straight up. And it's telling me, hey, John, when you bought the butterfly, this was $1.50. This wing was right here, right? This wing was $1.50, and this one was 60, and you're down 62%. But this is not accurate, right? This is not accurate in here. So, I mean, I guess it is depending on how you look at it, but it's not. And so it's difficult. So when I tell you our API is trying to read stuff, this gets way too confusing. I mean, to me, it's confusing already inside. right? Yeah, that's right, Martin. It's just weird. So there may be a way to code it for our programmer to be able to decipher. I wish my answer to you though is like obviously me just telling you whether or not it became profitable or not. But I wish that my bot was smart enough to go, okay, let's read this and see how he did. What was that? Oh, I got my trailing stop in. Okay. So trailing stop on CELH hit. We had a total of $2.09 there on that trade. It does. It does, Earl. Yeah, so you have to be super careful, right? That's what I'm always telling you guys. When you do debit spreads and you do butterflies, that's why you have to pay attention. Like, for example, guys, let me just show you. Okay. If for some reason we would have come in here, okay, and let's say, Earl, that it's barely pulled back, right? It's barely pulled back, and I'm too aggressive. Like, no, I'm buying back the body, right? Let's say that we paid 55 cents, which we did, but let's say that these were going for 250. All right. And this can happen, guys, in debit spreads where things don't really move that much and you're not paying attention. So in this particular trade, let's just say it's at 250. Well, if I only pay 55 cents and then I take away the body, now I'm holding $250 in contract, right? Per contract. And then let's say this is a dollar. Now I'm holding $350 when my true trade was only supposed to be a risk of 55 cents. And that can happen if you're not paying attention. Matter of fact, guys, we are in a trade right now in Alta, right? And some of you guys might have forgot because we've been in this for so long. We're in the money right now. Okay. So anybody remember we're in this trade? Anybody? Anybody? This is actually the perfect time for me to buy back the short side. Okay. Because this was my plan. Does everybody understand that? To be in the money here and make money and then buy back the short side. Does everybody understand that? But what happens if I buy back the short side here? What happens, guys? So right now, if I close this position, let me see what the hell that thing's going for. These are going for 66%. Okay. And I get $255 for them. Okay. Right? I paid price. Let me see here. I paid about $1.30 for them, $1.40, whatever 66% is. Everybody understand that? Are you guys following along here? Okay. This is important. And this side is down 56%. So overall, you're up in the trade. Okay. But what did I pay for the total trade? This looks like I paid on the put side, I paid about $1.30 something. Okay. So total, guys, I paid, this is a great example. I paid like 260 bucks. And if I buy back this right here, then I get 255 out of this. Okay. I got 255 bucks that I get out of this trade. Everybody understand that? So I've almost covered the cost of both of the trades. But if I came over here and wasn't paying attention and I sell this and make 200, let's say 60. So, now this thing is free or however you want to look at it. If I do that, but I buy back the short side and I'm not paying attention, now I'm carrying $480 of risk. My original plan was to only spend 260. And believe me, when you're first starting out with this kind of stuff, if you're not paying attention, this can easily happen to you. You're not thinking straight and you do something silly. You're like, well, I just remember my plan was to sell here, and you're like, you only look at the call debits and you're like, I'm up 70%. Sweet baby Jesus. Right. And then you come over here and buy this back, and then you're like, wait a minute, I got robbed here. And if it doesn't go down, you're going to lose $480. Okay. Now, I love this trade because it's long term. And what I could do here is just sell this once it gets over. Let's say I can get like 325 for it. Okay. Now I've made some money. I paid for both sides of the trade, and I don't have to buy back a short side because it's too damn expensive. But I still have 31 days for the price of Ulta to go down. Is everybody following me on that? Do I sound crazy? Does everybody understand that? I know it's a lot to kind of take in if you're just a straight up buy to open type of options trader. But if you're trading debits, then you understand where I'm coming from. I could, Earl, 100%. You're right. But Earl, I would rather close this straight up because I have so much time here. I believe that it could go down, and if you recall, I think this is a earnings trade, guys. I just bought it like with a lot of time. So let me look. I could be wrong, but let me just check. March 11th. Sorry, March 14th. March 14th. And these were March 15th. Yeah, this is an earnings trade. Yep, it's an earnings trade. Now, I'd like this to get really deep in the money, right? If this can get really deep in the money, Earl, then I will buy back the short side. You understand what I'm saying? If this keeps going and we find ourselves, Earl, right here, right, deep in the money, then these will be a lot cheaper. And if I can take on the risk without sacrificing my profits, then I'll buy back the short side. But I don't want to buy back the short side because this is a earnings trade for me. Okay. So looking for the run up into earnings that's happening right now, right? And if we can go even higher, which we're hitting targets, I'd like to see us at 534 before earnings, and then I will totally buy back. Okay. Ugh. Oh, by the way, we have upstart puts. So let's get over here to what earnings do you guys want to see? Do we want any earnings trades? What do we have for earnings? Airbnb? Yeah, I think that's a good one because we have Upstart, which could be pretty boring, maybe. Let's see. Let's come over here. Let's go down here. Let's check our earnings, guys. All right, so we already, I gave you the levels for Shopify and Datadog, which worked really well. We have Hasbro this morning as well in mode. I didn't check them out. I wonder how they're doing. But Airbnb, we have Upstart. How about some Hood? Hood, Lyft, MGM. I mean, all of these. Hood, Lyft, Airbnb. Let's do it. So right here, let me write this in. Earnings. And this is aftermarket, right? 213 aftermarket. Hood, ABNB, Upstart, which we've already done, right? We're in that trade right now. And what was the other one I just said? I just said another one. Shit. See how short term my memory is. Lyft. There we go. Lyft. That's what it was. MGM. Lyft and MGM. So which ones are you talking about, Basith? On what long-term calls are you talking about? Because I'm not getting out of my long-term calls that are like leaps and stuff like that. I'm definitely not getting out of those. Remember, if I'm long-term guys in a trade, I'm looking to add into these trades. I'm a scale in type of trader. All right. I'm scaling in. I do not go full blown hold my beer mode on my very first entry. Like I just don't. So, and you guys got to understand my allocations as well, right? Everybody's different. You need to know your allocations. What is small, what is big, those type of things. All right, let's go to AB and B. I'm going to give you guys some levels. I'm not going to go over how I do this because it takes too much time. I've done this enough with most of you. If you need to know how I do this stuff, then I would ask you to go watch my videos. Okay. So my mouth is already getting dry from talking too much. Okay. And the way that we do these, I would ask you to look and you set my expectations. We buy debit spreads around them. And what I just showed you is how we manage them. If we hit one, we take out the cash and then we buy back the short side of the other one. Because what happens during earnings on the other side, that debit spread, it loses all that premium. So we buy back the short side and then look for the long side to run. Okay. I should say trendy expectations because I don't want people to think that's the market makers. And what I could do is put in here the market maker's expectation. So just really quick, all you do is go to the analyze tab, go to A, B, and B. These guys are saying 12 bucks. Jesus. So guess what? Uh, market makers are right here with me, and I didn't even look. 12 bucks to the downside. Yep. I'm right here where the market makers want to be. A lot of times, if I'm in the same category as the market makers, it might be a good idea to try an iron condor if you're into that. Okay. All right. All right. So my next trade is going to be, and just actually, we'll do this really quick to get an idea if it makes any sense. Okay. So I'm going to put this right here. Let's do this so we can actually see. Yeah, let's just do this with orange. All right. So a lot of times what I'll do is take into consideration where I believe the market is going to, like who cares about earnings? Just what is the trend? What is this? What is the chart showing you? It's higher lows, higher highs, and a down range. Okay. So to me, it's more or less like it's bullish within a down range. Okay. Everybody understand what I'm saying? Bullish in a down range. This is a down range, but we are making higher lows and higher highs within a down range. People get a little confused. So overall, in my opinion, this is more of like a sideways type of potential trade. If it continues its trend, um, great. If it doesn't, it could pull back. I like the same dates on this particular one. I want to look at implied volatility, 112%. I'm going to come over here and look at, I don't know, 160 by 165s. Let's see what they cost. Now, the way I do this, a lot of people, they right click here and they go to buy, and I know you can't see it, and they go to diagonal or vertical, sorry, vertical. And this automatically comes up right here, okay? And so it's got a 160 automatic by 162. We're going to do 165, okay? And it's going to tell you it's $119. Let's do one contract, not just so you can understand what is my reward, okay? Confirm it's in. It's $379, guys. Not bad, not bad. 120 for 379. So now what I'm going to do is I'm going to come over here. I'm going to write that in here. 160, 160 by 165. Is that what I said? Jesus. Yeah. 160 by 165 equals $121 equals 379, something like that. Okay. So that's my reward. All right. Now remember, why is that number important? Because whatever I pay down here plus this 121 needs to be less than 379. Everybody understand? So 141. Do they have it? Yeah. 141. I'm going to go 142 by 147. It's going to be $1.08. 393. So what is our total cost here, guys? What's our total cost here? About $221. So total cost is 221 and we could make 380. Now you got to understand, in a perfect world, I could make 380 on this trade, buy back the short side of the put, and then it break right back down, and then I make money on the put side as well. So that is an extra bonus. But I like the risk to reward on this. Okay. Now, what way can we lose money, totally lose money here? If it goes completely sideways and doesn't move to either one of my zones, you will lose a total of 200 and something dollars. Does everybody understand that? I think it was like 320. Like now I can't remember, damn it. Okay. Let's look at it one more time. 393, my bad. Oh yeah. Well, that's a pretty big move. I mean, it really is. But Airbnb to me can disappoint, baby, to the upside or downside, depending on who you are. So this is 390. I like it. Am I okay before you take this trade? Right, I'm talking to myself. Before I take this trade, does it make sense for me? Am I okay with 200 and something dollars of risk? Does everybody understand that? Looks like my screen went black. Did my screen go black, guys? You can't see my uh, uh, gosh. No, 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 no. My futures screen went out. So I'm gonna sorry guys. You do? On my end it's black. That is so weird. On my end it's completely black. So that means I have oh, okay. Cool. I'll just leave it alone then. All right. So so this is a question I don't even know, guys. Can I that's like a debit iron condor, right? Can I just say buy and then do buy an iron condor? Let me see. I'm pretty sure. Yeah. 160 by I've never even done that. That's so funny. I always make it harder than what it needs to be. So 160 by 165 and 142 by 137. All right. There you go. It's going to cost me 231. I'm going to go up just a little bit to 234. Now, if I were to do 5 contracts, then you can see what that looks like, max loss, max. So I'm not doing 5 contracts. I'm not. And that's why for these, we go smaller and we can see what can work out. Now, the issue here, okay, just so that you understand, is that it's not taking into account my strategy. Okay, it's not. So if I come down here, I need to explain this really quick. Okay, I'm going to put this on. All right. So I'm going to put this on. You guys just got the alert there. Let me make sure everybody understands. Airbnb equals earnings trade. But this is really important. Total risk equals what I paid. Okay. All right. I need everyone to understand this. Let's just say that I get lucky because really at the end of the day, you don't know what's going to happen in earnings. So somebody asked over here, are earnings really that big of a catalyst, or are we viewing them as a push into zones? If so, do they make supply zones weaker, demand zones stronger with good news, and vice versa with bad news? So this is the saying, Ellie, if you want to write this in your journal. Earnings, FOMC, any catalyst in the market is a catalyst to push price into supply and demand. What we are doing is identifying supply and demand as if We're not even it doesn't matter to me about earnings. The way that I teach this is a long, long time ago, I would pay this much money and I would just have a hunch. Look, we've all been there. Hey, I'm a big fan of Airbnb, or I hate Airbnb because every time I rent it out, it looks like shit when I get it back. So I'm going to buy puts. And this is how people trade. Believe me, people still text me and tell me why they're going long or short. This is how humans do. So I was there a long time ago and I would pay the $645 to go short, and then it would go up and I'd lose $645 as soon as the market opens. And I'm like, Jesus, man, this feels like gambling, right? And it felt really yucky. Sometimes it worked, sometimes it didn't. So what I'm doing is, if you will, this is a um, supply zone because this is the calls, and this is the demand zone that I found on Airbnb. Right? So price goes down into this zone. I'm expecting it to bounce somewhere in here. So then I come back over here. Once I collect my profits from here, I'm going to buy back the short side as long as the calls are inexpensive, like I just finished showing. Only if that happens. In most cases, it will, because your implied volatility is 112%. Okay. So, what again, it doesn't matter what side it goes to. If I can collect, I mean, what the best thing happens, guys, is that they hit so hard, let's just say on the call side, that they go to 170. Then these are super deep in the money. We're going to get our profits. Then we buy back the short side. And then if Airbnb hits the supply zone that I told you about and then drops, then I get paid on these puts. Okay, so I've already paid for the trade over here. Let's just say that I make $370. And then I come over here. Let's say that these are only 20 cents tomorrow morning. But then all of a sudden, Airbnb keeps dropping and dropping and dropping. Are you guys listening? So they keep dropping, right? And these keep going up. Now they're not 20 cents, they're $2. So I've made 370 over here. Then I get the bonus of another two. And now I made $570 from a $231 trade, 234. That is the home run type of scenario, but I'm only paying $200 to get into the trade. Okay. Now, how does this trade not work for me? It goes completely sideways. All of these premiums burn the hell up. But guess what? I already know how much money I'm going to lose when I take this trade. That's all that matters to me. That's all that matters to me. So listen to that. These are not guesses. These are taking the same exact strategy that we teach and I use and applying it to earnings. That's all, guys. And sometimes you don't have to buy the weeklies. If you're bullish the stock, but you think it needs to pull back, you would buy the weeklies here and buy 2 weeks out here. Or the opposite. That's just going to be like some kind of hunch that maybe you have or you feel, but the key is not to spend too much money. That's all. Right? You want to make more than what you're spending. I love this strategy for earnings. I've shown it here before where I make absolutely nothing. And I've shown it to where I've made money on one side and then on the next side. And I've also shown it where I only make it on one side, but it pays for the entire trade. This makes it really fun. It's fun to manage. You get to get that experience. And the cool thing is you could take the same strategy and apply it to your everyday trading, which is really neat. Okay. You can literally, we could do this weekly. Every single week, I can do this. I could buy debit spreads on both sides using my trendy edges and so forth. It's really, really cool. All right. But, that's not all I want to do for the rest of my life. So obviously, I trade other things like futures and so forth. Okay. I hope that answers your question. All right. Let's get over here. So Ellie, does that answer your question on what you're asking? So I mean, yeah, if let's say that you had a fresh demand zone and the catalyst pushes down into demand, yeah, so anytime demand is tested, it is no longer fresh. It becomes used. And in the future, if you ever come back to that used zone, there's a couple things that intricate things that we look for in the zone to know whether it's bullish or bearish. So, oh, Parker needs in. Give me a second, guys. Come on, buddy. Man, there's pelicans flying out back. There's big Bernese mountain dogs wanting in. What are you doing, buddy? I wish everybody here. You guys want to see him today? Let's see. Let's see. Say hi. Say hi. How you doing? Say hi, Parker. He's huge. He's 150 pounds. So big dog. Big dog. I'm gonna have to get something else on YouTube here. Keep me busy. All right, so let's take a look at Hood. All right, guys. So I have been in futures since 49.79, just to show you how much those zones work. Boom! That's what we're talking about, baby. Now, if we can move above 49.93, things are going to look good. All right. Who else went long in the green zones? Anybody? Maybe, maybe not. You're welcome. All right, and just to kind of speed up my computer, folks, I'm gonna jump off the restream on YouTube, but it was a blast hanging out with you guys. I think a lot of you guys, I don't know if you are in the room or not, but I really appreciate you guys coming to hang out with us today, and hopefully I'll see you in the future. I think so. I do this every Tuesday, Taco Tuesday, baby. I'll be here with you guys. Okay. Thanks again. I appreciate you.